So QuickBooks Online, the balance sheet, how to find it, customize it, and fix it fast. All right, quick question. If I open your QuickBooks right now and ask you to find your balance sheet in under 10 seconds, would you actually know where to click? Or would you do that thing where you just click around confidently like you totally know, but internally you're like, please don't let anyone see this? Yeah, well, that's the balance sheet for most people. And here's the funny part. This report is basically the health scan of your entire business. But most people either ignore it or stare at it like it's written in ancient code. So today, we're fixing that. And by the end of this, you know exactly where to find it in QuickBooks Online, how to customize it like a pro, and how to spot mistakes that silently mess up your books. And stick around because there's a super common hidden error in balance sheets that make your balances look normal when they're actually completely wrong. That said, let's get into it. So we'll start simple. Here's how you find it. You go to the left navigation bar, let your cursor hover over Reports, click on Standard Reports, then scroll until you see Balance Sheet. Boom, that's it. Now, here's where people get confused. They expect it to behave like a profit and loss report, but it's not. It's not showing activity over time. It's showing a single frozen moment in time, like taking a photo of your business finances. And that distinction matters more than you think. So what the balance sheet actually means, no accounting degree needed. Let's simplify this. The balance sheet answers three questions. What do I own? What do I owe? What's left for me? That's it. Everything inside of QuickBooks gets grouped into three buckets. Assets, what do you own? Liabilities, what do you owe? And equity, what's left over for you? And here's the core formula that feels boring, but is secretly powerful. Assets equal liabilities plus equity. Now imagine this. You sell everything your business owns today, all your cash, equipment, inventory, everything. First, you pay off what you owe. Whatever is left, that's yours. That's equity. That's the true value of your business. But here's where people mess it up. They assume the balance sheet is just for accountants. Wrong. It's actually one of the best decision-making tools you have if you know how to read it. So a brief QuickBooks walkthrough and what most people miss. Let's go back to QuickBooks for a second. Once you open your balance sheet, you'll see two major sections. Assets at the top, liabilities and equity at the bottom. Now let's break it down like this. Assets, what you own. You'll see bank accounts, accounts receivable, people owe you money, other current assets, fixed assets, like equipment, vehicles. Think of assets like your financial inventory of value. Now, here's a subtle but important point. Accounts receivable is basically money people promised you but haven't paid yet. So if you're looking at your balance sheet and thinking, I have 20,000 in assets, but why am I broke? Check receivables, that's often the answer. And then we have liabilities, what you owe. This includes accounts payable, bills you haven't paid, credit cards, loans, long-term debt. And here's where a big red flag shows up. If you ever see a negative loan balance, that's not good financial performance. That's a bookkeeping mistake. Because loans don't go negative in real life. It usually means that payments were not split correctly between principal and interest. And that leads to another hidden issue. If you're not splitting loan payments properly, you're probably underreporting interest expense, messing up tax deductions, and distorting your true profit. But we'll come back to that because it gets worse. And lastly, we have equity, the what's actually yours section. This is where we see things like retained earnings, owner's contributions, owner draws, and most beginners ignore this section completely, which is ironic because this is where your actual business lives. Not revenue, not sales, equity. How to customize your balance sheet, which is where the real power is. Now, here's where QuickBooks gets interesting, because the default report is okay, but customization is where you actually make it useful. At the top of the balance sheet, you can change the date range. And this is huge because remember, balance sheets are as of a specific date. So you can ask, what did my business look like last month, last quarter, end of last year? That's how you spot trends. You can switch accounting basis. You'll see cash basis, accrual basis. And this changes everything. Cash basis equal money actually moved. Accrual basis equal money earned or owed even if unpaid. So if your account balance feels off, this might be why. You can customize columns and filters. You can drill down into specific accounts, specific time periods, or even isolate problem areas. Think of it like zooming in on your financial health like a microscope. Instead of just looking at your business, you're diagnosing it. Last couple of thoughts. We're almost done here. The mistakes that quietly break your balance sheet. All right, this is the part that nobody tells you. And it's the part where most QuickBooks users silently mess up their books. Let's go through the big ones. Mistake number one, things not balancing. If assets do not equal liabilities plus equity, something is broken. Even a $1 difference means missing entry, duplicate transaction, or misclassified account. QuickBooks should always balance. That's literally the name of the report. Mistake number two, negative balances in weird places. Cash shouldn't be negative. Inventory shouldn't be negative. Loans definitely shouldn't be negative. If they are, that's not advanced accounting. That's a mistake. Mistake number three, ignoring cash versus accrual differences. This one confuses people constantly. On cash basis, your account sheet may look cleaner. On accrual, it shows reality. So if you switch, your numbers change a lot. That's not an error. That's your business telling you the truth. Mistake number four, retained earnings confusion. People see retained earnings and think, what is this mysterious black box? It's just past profits minus past losses. That's it. Nothing magical, just history. So here's the big takeaway. The balance sheet isn't a report you check. It's a feedback system. It tells you if your bookkeeping is accurate, if your loans are structured correctly, and whether your business is actually growing in value. And you start actually understanding your business at a structural level, which is rare. Most people never get there, but now you do. So next time you open QuickBooks and click into your balance sheet, it's not just numbers anymore, it's your business, fully exposed. And honestly, that's where real control starts.